Traders, were you bored this weekend? Investors, are you terrified yet? Well, we're going to talk about a lot today. We're going to talk about all of the juice you could have squeezed out of the weekend just by following two very simple rules. And we're also going to talk about why I think there's still a little bit more pain in the Bitcoin market for us to take before we actually start to really bounce. Granted, there's a lot to talk about in the market today. War in Ukraine, Fed meeting next week. There's lots that could push the price down. But there's also some things that are starting to show up on some legacy charts that are giving me bullish vibes. Let's go ahead and dive into it. If you don't know who I am, it's Maestro. Welcome to The Long and Short. Let's go. Welcome to The Long and Short. Maestro here. Thanks for tuning in. Every day on this channel, we try to make you a better crypto trader by showing you smart money price action trading techniques from a long and a short-term perspective. Doesn't matter if you're a short-term scalper or a long-term trader, we have some pretty neat tricks to show you guys here on this channel. If you like what you see today, please don't forget to like and subscribe, hit that bell notification so you're aware whenever we drop new videos. Thank you guys for tuning in. Let's go ahead and dive right into it. The first place that we're going to start today is on bar chart. Now we use bar chart to take a look at what the CME futures are doing. And there's a specific couple of things that we want to look at. All of this price action here, we can get this on any chart, right? But we like to take a look at the open interest here, which is a bit lower than it was in February. I think February open interest got up to maybe 8,000, 9,000. Right now it's currently sitting at 75.66. So there's a little less interest and trying to tell the future when it comes to Bitcoin this month for March. And the reasons why, of course, I'm pretty sure everyone knows there's a war in Ukraine. The Fed is getting ready to raise the interest rates sometime next week. All right. So I think the market is in line with a lot of this news, and it's sort of just waiting on the sideline for things to happen. Another way that we can tell this is actually the case is by looking at the commitment of traders. Now, there's something very interesting happening on the commitment of traders right now. Okay. If you think about what most analysts in crypto are saying, and you can go on YouTube and see this everywhere, a lot of them are starting to think more bearish. People are actually admitting now that we're in a bear market, and people are saying things like hold, don't do anything, don't buy right now, don't sell right now, just hold on, wait. Okay. Now, as traders, we know that that's never an option for us. We can trade the market whether or not it goes up or down, and we can capitalize off of either direction. But for investors and longer term hodlers, I would say that you still have some pain to experience. So if in fact you were thinking about selling right now, it may not be the best decision, but you may experience a bit more pain in this market before you really see some real gains, especially for the folks that bought at around the $40,000 to $45,000 level. Those are the people who are, for the most part, most fearful. I think everyone who bought above 50 to 60K, they pretty much sold at this point, right? So it's the folks that are holding right around that 40 to 50K level to see whether or not the price is going to revisit those levels where they bought at again. Now, here's the thing. When we take a look at the market itself and the commitment of traders, what we always like to look at is this green line here in relation to this red line here. Now, if you're unaware of what these lines are, the green line indicates larger speculators, your hedge funds, your bigger banks, your money movers, okay? The guys with billions of dollars to play with. Then the red lines indicate the commercials. And in crypto's case, the commercials are the miners, the exchanges, the people who hold the majority of the crypto, of whatever it may be. Okay, in this case, we're speaking about Bitcoin. And then you have your blue line, which is the small speculators, right? Your smaller retail traders, the smaller banks even, okay? Still millions of dollars at this level, but much smaller level than your larger speculators. So the trick to looking at these three lines, we point this out in most videos, is that whenever your larger speculators are creeping up to that zero line, that is a bullish indication, okay? Now, they will usually swing opposite to what the retail traders do, okay? Which is why it always seems like retail's on the opposite end of the market and which way it's moving. It's not really that, right? Most people have the right idea about which way the market moves, but the bad part about the market is that it won't move with just retail money, okay? It will sometimes in crypto, but once you get the bigger institutions involved, that variable gets cut down dramatically when it comes to price movement. But they still like to be on the opposite ends of whatever retail does because this is how they capitalize. Okay, so once retail starts to get bearish, and I'm pretty sure that there's going to be plenty of news this week going into next week, which makes us think that everything is falling through the whole of the earth. All right. When it comes to Bitcoin price, when it comes to the war in Ukraine, there's going to be a lot of news out there that will affect price. All right. And we're thinking in more of a negative way. But if we look at what the larger speculators are doing, they are starting to go long. Now, when they push over this zero line and the commercials push opposite to their direction, lower than the zero line, essentially what's happening is the exchanges and the miners are serving up Bitcoin. They're selling it to the larger institutions who are buying it. So just watching the correlation between this little area here, right? And it's very hard to see. I know that. But if you were to zoom in here and you were to go to the commitment of traders on bar chart, it's very easy to see the relation in these two things. So if you can't see it, the larger speculators are pushing up towards the zero line. Your commercials are pushing below the zero line. Okay, this is bullish. This is very bullish. The next thing now to discuss is the elder ray. Okay, so on your elder ray, the only two things that you're really looking at is the bull power in relation to the bear power. So right now, the bears do have more power in the market, which does give us more of a bearish bias for the day, even though we're seeing the larger speculators starting to take bullish positions, okay? But what this is indicating to us is that just for today's movement in price, all right, you may have more of a bearish tone to the market. Now, things have been bullish, right? You're starting to peak above this zero line here, which we had a really hard time doing over the past few months. So you're starting to get some life in the market, right? And the bears are capitulating to some of this, but not by very much, right? They seem to come and take the power right back from the bulls when it comes to the elder ray, which is why it seems like we're sort of just stuck in this range, right? They're fighting at these levels, okay? If we take a look at the money flow index, things seem to be dipping off a little bit in regards to money coming into the market. So what do all of these things tell us? From a short-term perspective, it gives us insight into how we should play the market today. Things are still bearish, but they're only going to be bearish for so long, okay? Which is why we're saying you may still have a little bit more pain to go in this market before things actually really turn around. But how do you know we've reached the bottom? Partially, you'll be able to judge by what people are saying. But there's also a few other charts that we can take a look at to start to see, based on sentiment and where price has been historically, where we may actually be starting to find the real true bottoms in price, okay? So taking a look at the Fear and Greed Index, and of course, this website is Looking to Bitcoin. Very nice website. You can go ahead and check this out. There's tons of different charts that they offer for analyzing Bitcoin more of a long-term perspective, all right? So this Fear and Greed Index goes all the way back to 2018. It does, I don't think it tracks any further than that, right? These charts do go back to sort of the original starting point. And I think they started tracking Fear and Greed for Bitcoin sometime around 2018, all right? So this chart right here gives you sort of a dot by dot indication each month or each week as to what's happening with Fear and Greed. Down here, it gives you the actual reading, all right? So right now the market's in extreme fear, basically because, as we stated earlier, everybody that bought above 40K, they don't really know what's going to happen with the price, okay? The people who bought up here around 60K, 55 and above, those are the people who probably sold, the smart ones sold, as the price was coming down. If not, these are the ones who are pretty much in extreme fear because they've lost a lot more of their account than the folks who bought at around 30, okay? So when it comes to these charts here, right, even though it does give you an extreme fear reading, you got to understand that there are some people who are more scared than others in the market just based on this scale here. Now, when we look at this scale, we can get an idea of where people may start to become less fearful. So as price starts to break into the $43,000, $44,000, $46,000 range, people should start to lighten up on some of that fear. Now, do I think we're going to get a lot more fearful before we get joyful? Yes. There's a few other charts that we want to look at here that will indicate this to us. So this is the Bitcoin Investor Tool 2-year MA multiplier. Basically, this is a standard deviation of this one moving average here at the bottom, okay? And a standard deviation sort of 5 times that moving average to the top side. And you can see sort of when price reaches into the top side, it comes down, into the bottom side, it comes up. What we notice here is that price is starting to get a lot closer into touching this green line here. And where's the bottom of this green line? Currently it's sitting at 32,000. Now, will price break 232,000? These are areas on price charts right now that seem very possible for a lot of technical analysis traders, okay? And it seems possible for guys that are even fundamentalists, all right? Bitcoin going back to 30K is not out of the picture, all right? Sitting under 30K is not out of the picture. What else can we look at to see if price is finding a bottom yet? All right, so we've already see that one bottom here is around 32. Let's look at the pure multiple. What the pure multiple is going to show, and let's just get into how this can be used, all right? There's periods of time when the value of Bitcoins being mined and entered into the ecosystem is too great or too little relative to historical norms. Understanding these periods of time can be beneficial to the strategic Bitcoin investor. The chart above highlights periods where the value of Bitcoins issued on a daily basis has historically been extremely low, okay, where the pure multiple is entering the green box, meaning there's less issuance of coins, meaning the miners are holding on to this stuff, right? When it reaches into that green zone, this is when they're holding on the most, right? And this usually produces outside return for Bitcoin investors who bought Bitcoin here. It also shows periods where the daily issuance value was extremely high, the pure multiple entering the red box, providing advantageous profit taking for Bitcoin investors who sold here. Okay, so taking a look at the pure multiple, right? Price is nearing the lower bound, all right? And you can see here, when price does enter this lower bound area, on a number of different examples, just look at the blue line up here, okay? You do have very nice price movements to the top side, right? Even here on this one, right? So the pure multiple is showing us that price is starting to reach into the lower bound areas, which does give us another bullish indication. But for price to reach it, it does have to come down some more, okay? So does that mean more pain in price? Possibly. Also, taking a look at the 200-week moving average heat map. All right, now this is another tool that you can use and sort of just find where the bottoms were in Bitcoin. Where is the bottom? I'm not sure when it comes to this, but right now I'm thinking that the final bottom for Bitcoin is going to be anywhere in between, say, $30,000 to $25,000. Okay, it has shown us that it is willing to go here before, and it has shown us that there are plenty of institutional money buyers waiting right at that level to start to pack up Bitcoin when it reaches those levels. All right. So ultimate thesis, when it comes down to price action, do we have more pain to go on the bottom side? We do. Will it be immediate? No. Do I think a lot of what the market is doing right now, just based on all of this uncertainty, is scared running? Yes. Are there opportunities? Most definitely. All right. When it comes to volatility in the market, you may not have a ton of it, but when it shows itself to you, just following a couple of different movements in price action and rules in price action will allow you to capitalize on these things. All right. So what we're going to do next is start to dive into just a 5-minute chart on what happened over the weekend. All right. So we're going to box it off. We're going to get a real perspective of how you can have played the weekend and squeeze some pretty good trades out of it just based off of our 2 rules when it comes to liquidity and imbalance. Let's go. Okay, so to start off on this example here, when it comes to the action on the weekend, what we're going to try to do is highlight to you how price will create certain variables in price action for you to take advantage of. But you have to be a bit patient in order to make those things happen. So we're going to zoom into the 5-minute chart, and we're going to talk about price action sort of in a forward testing manner. All right, and give you our thought process as to what may have happened or what we may have been thinking, right? Or maybe even what we may have done at that period of time in price action. Now, we usually don't trade over the weekends because the weekends can get very tricky in regards to price action and what price may do, especially because you're in these smaller ranges and price could sort of just whipsaw all around here, which it sort of did over the weekend. All right, but what we want to do is outline the entire weekend, things that happened over it, and how you could have potentially played some pretty big moves if in fact you were paying attention to a couple of variables here. All right, so let's take a look at it. Now, these 2 blue lines here are going to indicate sort of the Saturday, beginning of Saturday at 12 a.m., to the beginning of sort of Monday morning, 12 a.m. All right, so this is the entire weekend sort of encompassed here in between these blue lines. Now what we want to do is go into the 5-minute chart, all right, and we want to sort of scale out and zoom all of this stuff out and put the price action right at the beginning of where this first blue line is, all right? And I know things are sort of out of frame, but let's put it all back into perspective. All right, now, when we first approach the market, right, we have to look at it from an historical perspective, but when we analyze the weekend versus the week, I think there's two different ways that you should approach it. Typically, the weekends can get volatile, but not often. And when they are volatile, they don't necessarily play by the same rules that the week played by. All right. So if we were to zoom this out and take a look at last week's price action, we can see that price sort of reversed on a dime right as Wednesday opened up in New York, and it just retreated, right? The market retreated all of those positive price moves that happened on Monday and Tuesday, Wednesday, Thursday, Friday, it reversed it. All right. But we're not necessarily taking all of that information into the weekend, especially when it comes to the imbalances in price. All right. So we usually play this out in a very specific way. If the market has moved in an aggressive way towards the end of the week, things will probably be a little silent over the rest of the weekend. If the market was sitting still over the course of the week, then things could get a little bit more volatile over the weekend. It's an inverse thing that we typically see as we go into the weekend, right? So that's the way that we view it. But looking at this price action, we had just came down off of a pretty hard fall, right? After Monday's and Tuesday's big push, we had a pretty hard fall over the weekend. It kind of put us right back at the same exact level where we started from on Monday. Now, taking this into account over the weekend, all right, what are we looking for? There's areas where price action could come to refill when it comes to imbalance. But these aren't necessarily targets for us, right? We still think that the weight is bearish. And if price were to come up here, it's really just to kind of set us up for a bigger move down. All right. Now, it's easy to say in hindsight, but this is the way that we were actually thinking in the market over the weekend. It could be bearish, right? Not necessarily bullish. I don't think that there's really any institutions right now that are willing to really start pulling the trigger on Bitcoin and launch it out of the $39,000, $38,000 level. If you get a little bit lower, that's a different story. All right. But right now, not so much. Okay. I'm thinking a lot of people are really just waiting to see what's going to happen with the FOMC. What we want to do is sort of pinpoint and highlight a couple of things here when it comes to price. Now, as price came down, right, it sort of settled into this little range here, let's say between 39,000 and let's say 38.5. Okay. In between this range, we want to see how price plays around in this range. What is it doing? Right? Is it breaking highs? Is it breaking lows? Which way is it actually going as the weekend starts? Now, usually there's not very many people trading over the weekend. So you typically tend to get these nice little rallies in price, right? On 5-minute charts, 15-minute charts. They sustain and then they die, right? Sustain and then they die. Somebody's spending some money in Bitcoin, but it's not a big house, big institution, big country per se, whatever. They're kind of just hanging out over the weekend. Most people that do have some capital to trade, right, they'll try to enter into trades. And what happens is they typically get wrecked, right? Because price will shoot up like this and they kind of come right back. But what are we really looking at in price? I'm going to zoom this in just a little bit. We always want to look to the left to see what areas are being violated first, because we understand that once liquidity is grabbed from the top side, that price has the right to go the other way. Now, there weren't very many imbalances or really big imbalances in price for us to capitalize off of. So 1 or 2 candles on a 5-minute isn't necessarily the best, trade to take, because it can just turn right around, right? So a lot of times when traders get in on 5 minutes based on the imbalance rule, if they do it off of 1 or 2 candles, it sort of sits you still. You're not really getting any real movements in price, okay? So what are we looking at here? In order to play this safe, we're seeing liquidity get grabbed from the upside, so we're still thinking bearish, okay? Bearish preceding price action, right? That was pretty hard. And now things are starting to get snatched from the top side. So as long as this is happening, every time that we see liquidity get snatched from the top side, we could take a short. But we can see that the movements aren't very major. They're just kind of going right back to where they started. right? So unless you're timing this perfectly, you're not going to pull this trade off, right? The price action is too small. But look at this. We now start to see a spike to the bottom side and nice little push up. But this push up doesn't necessarily reach these highs here. So if we're expecting price to give us real price action movement, all right, and if we're bullish and if we're thinking that this is sort of a bottom, right, then when these grabs to the bottom side happen, it should push higher than the previous high that was set. So when we don't see this, okay, we're still thinking bearish. This still gives us bearish tones and vibes in the market, right? So now we can start to think, all right, price has already grabbed a couple of highs here, tried to push low, couldn't really do it, okay? The low came, snatched some liquidity there, tried to push high, couldn't really do it, okay? The next time it happens, all right, you get sort of the same result. Another spike of liquidity here. So the price is not moving in the way that we really want to see it move to give us any indication that there's any real trades to take, right? It's just sort of sitting sideways here. Now check this out. These highs are set, sort of these highs are leveled off, right? And we like to look at where the tables are being set. Whenever you see candles, even on the 5-minute, that sort of creates sort of a level line here. And then that area of liquidity is broken. This is a much better area to start to pay attention to, right? Now, even level here, price breaks through it, starts to come down. Now, what is being created on the way down here? You're starting to get a lot more imbalance, right? And you start to see some areas of imbalance that start to get refilled right away as they're created, right? So now what I'm starting to think is that if these areas of imbalance are going to be refilled, right? You had a nice little stab up and a wick down of that liquidity. And now you're starting to push in a much more aggressive way to the downside and pushing price there, right? So anytime now where tables are being set, we're starting to think short, right? So say, for example, we see price spike up here, we miss it. Did we miss anything? Not really, right? Price is still moving, but you see it fills these imbalances, right? So for you to take a long here just to fill this imbalance, again, very hard play to move with, okay? Let's just keep going. Now price comes back up. Now look at what you get here. Very aggressive spike up to the top side. In my opinion, this is the time where we want to start to be very attentive to price action. Now, get this break. Takes out all of these levels of liquidity to the top side here, right? You have 1, 2, essentially 3 areas here. Price keeps going a bit, but I'm starting to really think short at this point. And I may even put on the short at this point, all right? And let's see if it would have played out, all right? Price does continue to climb, and then we start to see lower prices. Now, why did I put the short on there, okay? I see that price reached. It broke this liquidity. It didn't push far to the downside. So in my opinion, it wants to do it again. It wants to keep reaching for higher liquidity. It wants to set the table, reach again. So me getting in on either this candle or one of these candles here would have not been out of the question. All right, price has shown me that it's snatching up this liquidity to the top side, and I know that it wants to break lower, okay? And the higher that price pushes up, compared to these level lows here, I'm thinking it has a farther area to drop. The trick is to buy it as the candle is rising to buy into the bullish action, right? So now we're starting to see some movement here. Okay, now price is starting to break my way, but it's coming back up, it's coming back up. All right, now we're getting a little bit scared in price action, okay? And we may have got taken out there, all right? So that would have been a trade that didn't necessarily work, but we're following the same rules. Grab the liquidity, what's gonna happen after that? Price should go the other way, all right? So we could have played this in 1 or 2 different ways. We could have just sat in this trade, right? And we could have taken some profits here just based on this liquidity area being filled, all right? So if we were thinking, if we were smart, this would have been a play, all right? But if we would have sat in this trade, chances are when price came up like this, would have scared us a little bit. We probably would have taken some profits, maybe not all of it. And then when price came up here, it would have taken us out, okay? Because usually what we do is once we enter a trade and price moves in our direction, we move the stop loss ahead of where we're at in regards to entry points. Because if price does reverse back on us, especially on these 5-minute charts, it could definitely happen, right? We want to be taken out of the trade with something, right? So let's just keep going. And again, we're going to follow the rules because we know that price wants to break short. Looking at this area here, price does start to break above. So this could have been another area short. Now, chances are if we were taken out, we probably wouldn't have took it. All right. But this one looks like a good area to enter short. Nice little spike, very subtle above this liquidity here, right? And if you look at this wick, sort of aligns right with this one here. So we're thinking that this may not have been the ultimate grab, but this is a good area for us to enter short as well. Let's see what price does. Sort of sits still, right? We do get a breakdown in our favor, and price still kind of just swings in this area, okay? And now look, taking us out again. Now, if price swung in our direction again, we would have protected ourselves, would have been another small win, okay? But again, we have another spike here, taking out these even sets of liquidity here. This is all 5-minute charts, right? So this is active trading. You're watching it. You're sitting at the charts. Another spike. Are we thinking short? Yes. So what do? We get in. What does price do? Eventually, it gives us what we want. Now, there's always a decision to be made when price does come here, okay? The decision is, do I get out once price takes out the objective? Now, mind you, we're in the weekend. It's a very small range that we're playing in. Big price breaks like this are not promised to keep going. Neither are price rises like this, okay? Now, we would not have taken the long because our idea is that price's weight is short. But seeing this price action here, but it gave us more indication that, yep, you know what? This is a range. No matter what we do, when we reach these high areas of the range, and if we zoom out a bit, you can see that this was actually the target. Taking out these two areas of liquidity here were the targets. When price spiked through that, longer term, it had the right to go down there. If you're playing it on a 5-minute chart, you have to be patient in order to let price set itself up to do what it wants to do before it actually makes the real move, okay? Now, being that price did sink here, and came right back to it, look what it did. Set another even level, okay, at this point. Now, are we still thinking short? Yes, even though we did see this nice up movement here, because look at what's created. Very big areas of imbalance on a 5-minute chart. So this gives us more conviction at this point that price wants to go short, all right? So if we were smart, we would have sort of either broken even or maybe even lost a little bit on the first two trades. Second one, based on where we entered and where we got out, or where we were supposed to get out, right? Because we want to exit after price crashes through these lows. Why? Because there's liquidity here to take price higher. All right. Now, price goes up higher. What do? We're thinking short still. All right. This is a grab of liquidity. Not so much, right? There's still areas here. We want to see price go a little bit higher and take something from the top side before it goes lower. All right. And we see that price hovers, and then angles its way down. Doesn't give us that opportunity, right? Doesn't give it to us. But if we were thinking short, this was the area to take it. Why? Because you have areas to the downside here that want to be filled, all right? Now, you see price does come down, create bigger areas of imbalance, and now it's starting to retrace back through some of them, right? Which is where some of that rally is coming from today. All right, and this is currently leading us up to current price action, but you can see imbalance created, price comes to refill it. Imbalance created, price comes to refill it. Imbalance created, price is going to come to refill it, right? Imbalance is created, price comes to refill them. And this is the current price action that it seems that we're getting to here. Okay, you have an imbalance there. That price eventually comes to refill, okay, which was the movement today. All right, so the reason why we say look for the imbalances, look for the areas of liquidity, is because it tells you where price really wants to go. All right, now those were numerous different examples of how you could have attacked that over the weekend. But you have to be patient and you have to allow price to start to move its way through its cycles, set up the highs, set up the lows, spike through them, then make your move, okay? So this price action was just a little bit too choppy for us to take any real advantage of the market, which is why you see no trading that took place over that time. But looking back in hindsight, we see that the rules that we established when it comes to price and how it sets up liquidity and how it goes for imbalance, they were definitely respected over the weekend. And we're going to take this into next weekend to see if we can capitalize, right? And the thing that really kept us out of the market was the fact that we just didn't see any really good entries. But just based on that previous hindsight example, thinking short, we may have had a couple of plays that materialized for us if we were able to hold on. But you see how the market, even in hindsight examples, right, will put you in a mind state where you're not necessarily there to catch the biggest move. Okay, so that right there was a pretty rough example to go through, but it helps you, right? You should do the same exact thing when it comes to price action, right? Zoom things in, okay, on a 5-minute chart. Scroll the price action back and start to think about what would you do if the price was actually at this point. All right, how would you react? What would you wait for? What would you not do? Okay, just based on the previous price action, the bias that you developed for that day, what would you do? All right, and this will help train your mind to start to see things in price action, and as price starts to move forward, you'll see where these things are where these things are starting to be respected over and over and over and over again on your charts. All right, so that's the little forward testing example. Let's take a look at a couple of coins here just from a longer term perspective and the total crypto market cap. A few things for us to kind of dive into there. All right, for total crypto market cap, we're seeing prices in a weaker zone here, right? And as we always say, whenever price is above the $1.876 trillion line, it seems that things are happy in the market. People are having a good time. But when not, right, you're more of a bearish mind state. And most analysts, again, are starting to think bearish. We think that this is because the market just really isn't showing us what we want to see. We want to see us break out of this level, continue up, get back over $2 trillion market cap. These are the things that are really going to pump the market for us, based on what we like to see in the market. And if we're not seeing that, it's mostly because our market cap just stays in this weak zone here and it doesn't do very much for us. So this is why January has been a fairly bad year for crypto, because we're not having a lot of really good days above that $2 trillion market cap where you will see your larger pushes in price action. All right, so hold strong because we are holding towards the top side of this range, not necessarily the bottom side. When we reach the bottom side, we spike off of it. All right, so these are all positive signs just looking at price action here. There's buyers. There's buyers here. All right, guys. So don't lose faith. Don't lose hope. Crypto is what it is at this moment. And I think these are part of the growing pains that this audience and, really all crypto in general is going to have to go through in order for us to maintain a solid market for the next 10 to 15, 20 years, right? This is an adjustment for a lot of people when it comes to this space. And until we adjust everyone in the proper way, you're going to have these areas in time where things seem that they're very gloom and dark. But just looking at the charts, it tells you that whenever the price starts to push more into these lower levels of market cap, you do get explosions out of these areas. Let's talk about some daily charts when it comes to Bitcoin, Ethereum, a couple of other coins. As always, we like to point out our method when it comes to this: discount versus premium, scaling in, scaling out. This is what we think is the best method to play the crypto market, regardless as to whatever you're into, whether it's Bitcoin, Ethereum, any other coin. What we're doing is we're outlining levels where we want to scale into positions. And when we say scale in, it's not dropping everything, a little bit here, a little bit there. Whenever price does reach these areas of price action, okay? So for us, when it comes down to Bitcoin, we want to scale in somewhere around 34K, right? So showing you the pure multiple or the Bitcoin investor tool, the bottom is right around 34K, right? For that. These are good areas that are showing us confluence in price action itself that we want to see and actually get into Bitcoin at these levels, okay? So 34 to 32, from there, right? We want to see a bounce, okay? Anything under 30, we start to get a bit more worried, which is why we have this white line here. But these are excellent areas for you to scale into Bitcoin. 34, 32, 31, we think just based on previous price action, this is where you want to get in. Then, of course, scaling out, 45, 50, 449, these are the areas where we want to get out. All right, and as you can see, just based on our model here, when Bitcoin comes and hits these scale in areas, it goes to the scale out areas. All right, so you're in here, out here. And again, you're not taking everything off the trade, but you are taking a substantial piece, right? Based on previous price action, we're stuck in a range. Every time price hits this scale out, I'm going to take a nice little portion of that trade out. Why? Because I know that price will most likely come back down into a discounted area, which is this yellow line separating it here, right? So just using this logic, using this method is going to help you more from a longer term perspective be able to find areas to get in, areas to get out, and you just be patient and wait for price to reach into these areas before you make a move on the long-term perspective, right? So Bitcoin looking pretty good in regards to honoring our scale in and scale out levels. And this does work very good on Bitcoin. The method that we use to set this up is being placed into a tutorial as we speak. And we're going to have a lot more to kind of dive into once people start to see that tutorial, because then they'll be able to go in, set these charts up for themselves, ask questions about what they see on their charts, and we'll be able to have a much better conversation about what we're seeing here, because this is the secret sauce, folks. No one else is showing you this, but this is the secret sauce when it comes down to long-term trading. If you follow along with this, you will be able to make positional moves when no one else is making them, right? Just based on some very simple rules and things in price action that continuously prove themselves true. And just based on everything that I've showed you with liquidity today, let's just ask a very simple question, okay? Where are the imbalances in price on the daily chart? If you look to the top side, you see one here, you see one here, you see one here, you see one there, you see one there, okay? This not so much, but there are areas of liquidity and imbalance for price to go get to the upside, just as much to the downside, all right? And if we scroll all the way out and go to the left, I can show you areas of imbalance to the downside, but they're further, okay? They're further down, somewhere around the $20,000, $24,000, $25,000 level. We don't want to see Bitcoin go there, but if it does go there, then it just reaffirms and reconfirms all of the things that we see in price action, and it just makes our case even stronger for how to play this market. That's Bitcoin. Let's take a look at Ethereum, which will basically show you the same exact thing. All right. The really impressive one, though, is Terra Luna that we're looking at, because Terra Luna launched from this discounted area to a very high premium area, hit that scale out zone, and started to come right back down. You guys can track these videos back for a couple of months now. These lines do not move. They stay here, right? And when price does touch them, this gives us indications that we should be making some moves either into or out of the market. You see here, very beautiful play. Scale in to scale out. Let's just draw this up and use our measuring tool to see what that return could have been. It's a nice little 119% return just based on this model here, and it would have taken you approximately less than a month. You would have been able to do that, okay? So these are the type of moves that are available in the crypto market. Never let anyone tell you that crypto is not an opportunity. Never let anyone tell you that crypto is the biggest Ponzi scheme on earth. There are tons of Ponzi schemes out there, but this has sort of the same investment rules and techniques that any other investment has, okay? It's all about who gets in first. I don't care if you're talking about real estate, stocks, doesn't matter, guys. Why do you think they have private sales for stocks too? It's all about who gets in first, no matter what you're talking about. You can believe the hype, you can believe the media, you can believe whatever you want to when it comes down to this space. What we like to tell people is that the charts will reveal all. And if you see power in charts, that means that there's money in that market. And if there's money in that market, then you should want to capitalize on the money that's being made in that market. It's no different than any other market out there on the face of the earth, all right? So there's a lot of people who will tell you otherwise, but I'm here to tell you that this is the greatest asset class I think that has ever been created. And the reason why is because it sits on the leading edge of emerging technology. And even though you can get completely wrecked, this has made way more millionaires than the stock market has this year. All right, in my opinion, and it will create more millionaires, young millionaires, than the stock market ever will. All right, and that's just my opinion. That's just my opinion. Because if you understand how to trade this, this becomes a gold mine for you. All right, and what we're trying to do is show you how we're approaching it. Now, whether or not we turn into one of these guys that's on a boat, I'm pretty sure we will. It's just about us taking the risk to get there. And as with everything, without no risk, there's no reward. So, that being said, man, we will be putting out the tutorial pretty soon when it comes to how to build this, right? Because again, we can go through a number of different coins and see that the scale in to scale out, just playing discount to low premium, it presents opportunities for you. And that's all we're trying to do. We're not going to fudge you to death. We're not going to FOMO you to death. We're going to show you the things that are on the charts that we see that allows us to take positions and make moves in the market. All right, so that being said, I think that will end the video for today, but we will be coming back soon. We need to work on this tutorial so that we can start to get this out to people, to have a much better conversation about things that are happening in the market on a daily basis. And it'll also give you sort of all the tools you need in order to set yourself up to be a long-term swing trader in this market and take advantage of these things rather than just sit on the sideline waiting for the next YouTuber or person in the crypto media to tell you when to buy or to sell. All right, guys, so I think that's going to do it for today. So it's your boy Maestro. Thanks for tuning in. If you learned something today, if you found this video information valuable, please go ahead, hit that like, subscribe button, bell notification. You'll be notified whenever we do drop content and we discuss things that are happening in this market. Now levels do get hit, man. That's all I can say. All right, so trade challenge will continue this week. We are looking for some opportunities to jump in. And we will continue to try to build up this 25K, man. As you guys can see, no losses taken, no wins taken. You know, it's just sitting right there. But we do have a little bit more leverage to trade with. So we may take a bit more risk in these trades to try to up this account a bit faster. All right, so that's all for this week. We are working on this tutorial, so look forward to that. It's your boy Maestro. It's been the long and short. Thank you for tuning in. We out of here.